Welcome to Talkenomics Live. We are streaming from a live studio audience in Burbank, California. It's like the old 1970s game shows. No, we're in Brooklyn, New York. We are streaming live to you. And this is where money meets mindset. If I've learned anything over my roughly 20 years as a financial journalist, it's that mindset is as important to the decisions you make about money. And that's why we bring in all kinds of guests to talk about what you should know before you plop down a buck for a piece of stock or any kind of asset. So we're going to be talking about a lot of things, especially catching our breath, because today was the day when the market seemed to get a message from high on up. That would be President Trump and the Treasury Secretary that things are going well. Take a look at that. Dow was up 1.1%. We had the S&P 500 up 1.7%, and we had the NASDAQ up 2.5%. We're going to break down why that happened and then what could possibly happen next. At the end of the live stream, we're going to be joined by Angelo Zeno from CFRA. He's giving us a preview of Alphabet's earnings. They're reporting tomorrow after the bell. This one you don't want to miss because lots going on. What's going on with Gemini? What's going on with their outlook? Angelo is on top of it. We're also going to be meeting Justus Parmar. He is a self-made man, venture capital, but he understands markets much greater than venture capital. So we're going to be talking about what's going on with Tesla. We're going to be talking about what's going on with gold. He's going to give us his 2 cents. He's worth a lot more than that, by the way. And he's joining us live from Miami, and he will break that down for us. But our first guest tonight is somebody who you may know very well from Fox Business and other CNBC, different platforms where he is often a guest. And now he is joining us for what we're going to call the start of the deal. Ryan Payne, welcome to Talkenomics Live. Ryan is the founder of Payne Capital Management. It's good to have you here, man.
Hey, great to be here. Thanks for having me tonight.
So I want to talk about
I
want to talk about the start of the deal, because this is all Trump related, but it's also Treasury Secretary Bessent related. And here's what the CNBC headline today that made a lot of people happy. Treasury Secretary Bessent says China and U.S. have, quote, opportunity for a big deal on trade. So is this enough to explain why we were up today, but is it enough to sustain momentum that we recover what we have lost since the market peaked a few weeks back?
Yeah, I think, markets trade off of certainty, right? And when there's a lot of uncertainty, like we've had the last couple of weeks, markets have been in turmoil. I was joking. I think the art of the deal is President Trump took a big rock, threw it in the middle of a pond, and just caused, a ripple effect. And you're kind of waiting for those ripples to settle down. And I think that's what you saw with the rhetoric from yesterday to today. Instead of ratcheting up tariffs even higher, 145%, that wasn't high enough. We're going to go higher. It sounds like now they're willing to negotiate. They put the olive branch down, and we're going to look to possibly bring back some of those tariffs and bring some negotiating to the table here. So I think that's what the market liked. That's why I saw the big rally the last 2 days. And of course, there's a lot of other countries right now that the Trump administration is furiously negotiating with, trying to come some sort of deal. Because if you're a manufacturer right now in the U.S. and you don't know what your import costs are, you're basically coming to a standstill. In America, we don't like that. We like business moving all the time. So at this point, we really got to see these deals come quickly. And I think that's what the market's telling you is the right moves are happening.
All right. So I slugged this episode, avoid money mistakes. And here's my concern with the markets, at least it would seem the last 2 days on the swing up. Is now the time to start deploying maybe some of the cash you would have had on the side? And I ask that question because I think deliveries to the ports in California, Long Beach, are still well below, and I'm talking about from China. They're down something like 30%, and we don't hear yet how the Chinese have responded to the overture from the United States.
No, we're still waiting on a response. And I guess from President Trump's perspective, he says he wants to hear from Xi Jinping directly. So I don't know how that's going to play out. But I think the bottom line is China can't afford not to trade just as much as we can't afford not to trade. And arguably, they can't afford more than we can't afford, given the fact they've come out of this huge property bubble that burst over the last couple of years. They've been trying to export their way out of it. And, I don't know what the real number is, but, not just direct, goods that are coming from China. There's a lot of indirect goods coming from China, whether it's through Vietnam or Canada, Mexico, a lot of other places. And, I think at this point, the conclusion is something has to be done about that. And I think as an investor right now, I always say uncertainty is your friend. When you know what's going to happen, you know what the next move is, and you have clarity. Well, markets don't tend to settle down; they tend to settle up at them.
Oh, I might use that as a quote when we write this up. But let me ask you this, because are the people watching us on X and on YouTube, on LinkedIn, you can put your questions for Ryan and then our guest, Justus, when we bring him into the discussion. They will answer your questions. All you have to do is put your chat or your question into the chat section on X or on YouTube, and we'll make sure that it gets asked. So you just talked about the uncertainty, and I want to bring up the volatility. Part of the back and forth has been whether or not President Trump would fire Jerome Powell at the Federal Reserve. Now, the president in previous tweets has called him a loser, has said needs to be terminated as soon as possible, and is pushing as hard as the president can for Powell and company at the Fed to cut rates. But I interviewed the CEO over at InfraCap, Jay Hatfield, and he thinks Powell should be fired, even though the president has backed off on that. Here's what Hatfield said to me, and after the soundbite, I want you to respond.
I'm hopeful that Scott Bessent, who did win over the Navarro camp, is now in charge. And he's a capital markets person, so he knows exactly what we just talked about. You'd have a huge loss of confidence and a big drop in the market, which we've already had plenty of that. So I'm confident / hopeful that it'll be no earlier than the third quarter, and there'll be some sort of process developed by Bessent to replace the Fed chair, but not do it immediately.
So he still thinks Powell's going to be gone in the third quarter. What do you say?
No, I'm not buying it. I mean, I think you need the independency of the Fed. Is it an apolitical position? Completely, arguably not. But we did learn when you don't call the Federal Reserve chairman a big loser, the bond market settles down, right? I mean, you had it spiking yesterday. It's come down a little bit today. It's moderated. And look, if you're in Jerome Powell's situation right now, you kind of are between a rock and a hard place, because short term, yes, inflation has come down, right? That CPI number came down to like 2.4% last month. Oil prices have plummeted. You're at a 4-year low in oil prices. And to me, oil really fuels all inflation, right? Oil prices in that 10-year treasury kind of trade in lockstep. But no, tariffs are a wild card. And look, if we don't believe that tariffs cause inflation, I've got a wall in China I'd like to sell you. Let's face it, right? If we put a 10-15% surcharge on, let's say, clothing, well, we could go to an American brand. Oh, wait a second, there aren't any American brands. We don't make clothes here in the U.S. You're gonna wait for us to start manufacturing those clothing here, or you're gonna pay the tariff. So I think tariffs inherently are inflationary. We don't know what they're gonna look like yet. So if I'm the Fed chair here, I'm probably gonna wait and see. I'm not gonna rush to cut rates to see if it does have an impact on inflation, because the worst thing you want to do here is cut too early. Mm-hmm. That exacerbates inflation. That 10-year treasury gets out of hand. It really starts to go up like it did in the fall when the Fed cut back in like September. So I think, there's a real risk here. If you do cut too early and you push that 10-year treasury up further, that increases our borrowing costs. And we know we have a huge deficit right now. I think that's a real sensitive issue that has to be handled with kid gloves here.
So here's what I'm thinking. I think we should go to break, because I want to get Justus Parmar into this discussion. And just to give you a little bit about this individual's intuition, he was early regarding lithium and sold a stake he had in a lithium company. It was like $460 million back in 2021. And I'm sure he could add to our discussion about whether we should punt Powell, what's going on with tariffs, and so much more. So let's take a quick 30-second break. Viewers, you can put your questions in for Ryan Payne and for Justus Parmar when we get back, and we're going to welcome Justus into the program and get his take on what's happening in the world of finance. You're watching Talkenomics Live. Welcome back to Talkenomics Live. We are streaming on X, Rumble, YouTube, LinkedIn, Facebook, everything, including your grandma's kitchen sink. You can ask questions. Make sure you put them into the chat, and we'll make sure that we ask our guests to comment on these. We've been talking with Ryan Payne from Payne Capital Management. Now we want to bring in Justus Parmar. He's the CEO at Fortuna Investments, and we're going to talk very briefly with him about venture capital. But I know you want to weigh in on what's going on with tariffs, what's going on with these markets. And then I want to ask you about rare earth, because that's so much a part of the China discussion. And as I was saying before the break, you made a very good decision regarding lithium a few years back. So Justus, welcome to the program. I wish I was in Miami, as my people say, Florida. I wish I was down there with you, but it's good to see you.
Thanks for having me, Adam. Great to see you.
Real quick, I just got to get this VC question in, because I've been wondering what happens in a world where, dollar uncertainty seems to be going back and forth, and raising capital seems to be a problem. Do we see threats to businesses trying to raise capital through venture capital like what you do because of the volatility we've experienced?
Short answer is absolutely yes. VC is a risk asset. Obviously, currently in the last 4 to 8 weeks, the risk off trade has really shown up. And again, even in the broader markets, right? People are leaving equities to go into bonds, and that trickles all the way down. And especially if you're in the most risky asset class out there, which is basically VC, inherently it does dry up. It's not forever, but I do think people want to maybe just wait to see how this storm shakes out. Of course, there's tons of volatility in the market and things like that. But yeah, to answer your question, absolutely. There's been let's say a wait and see kind of pause period in VC generally. That said, it's not totally dead. Some things are still being funded. There's a big push into robotics. Robotics is a huge avenue for VC. Defense tech has been a strong theme, especially with this new administration coming in. And you've got the public names like Palantir, and you've got Anduril and companies like that are, Palantir's worth more than Lockheed Martin. And so I think people realize that technology and the military are going to meet hand by hand, which hasn't really been done before. So there's a lot of enthusiasm in areas like that. But to answer your question in a very broad way, this volatility is not great for risk on assets such as VC.
So real quick, let me ask you one more question. I want to turn it to markets. And I was talking about your insight into rare earth and lithium. That's a big discussion, especially with the China trade situation still in limbo. How do you make a play with that? What should an investor be looking at? Because it's not as if we just snap our fingers and all of a sudden there's a bunch of American companies, mining rare earth minerals, or am I wrong?
You're bang on. There's actually only one company in America that's mining rare earth minerals. It's a company called MP Materials. It trades on in New York at about a $4 billion market cap. But in the entire country, that's the only company that's mining mining rare earth minerals. And people might wonder, rare earth minerals, so what? What does that have to do with anything? This is crazy. Think about this for 1 second. So 90% of our supply and processing of rare earth minerals comes from China. 90%. If China were a company, it would be broken up and dissolved by the FTC because it'd be a monopoly. It's absolutely crazy. And so rare earths are used from almost every weapon, in the sense that you cannot make a submarine, you cannot make a fighter jet, you cannot make a missile guidance system without these very, very valuable rare earth elements. From a practicality human perspective, you can't have iPhones, you can't have most modern electronics, you certainly can't have the computers that we're talking on this channel through. And so China owns 90% of that. And that's why the president's been on a wild goose chase of sorts, trying to go into Greenland, trying to negotiate a deal with Zelensky, trying to take some of these rare earths to offset this $500 investment in the war that we've made. And so that's why it's really important. And, we've been actually backing a project for the last couple of years that we're going to be taking public on the NASDAQ this year, in the back half of the year, which we're looking for it to be the second producing mine in America for rare earths.
Ryan, why don't you jump in here? Because I'm sure you've got some questions for Justus.
Yeah, well, that's a great point. I mean, the art of the deal here, we'll call it, quote unquote. It seems to me a lot of that is trying to extract some sort of rare mineral deals with some of these other countries. So besides Greenland, Ukraine, where are other places? And domestically, do you think the policy is going to change where you'll see more mining here? Like, how does that landscape change? And what other countries do you think the Trump administration is going to try to extract a deal from so we can get it from other sources? Because I know that is a huge national security issue.
Yeah. So great question, Ryan, by the way. And so I think it's two-pronged. One is ultimately we would love for the domestic supply to come online here, but unfortunately that will not happen overnight. So I think there has to be a bridge of sort, right? And so, neighboring countries like Canada have a lot of rare earths. They've got some good, I think they're going to actually have a new prime minister there who's going to be very pro mining and business with any luck. But to answer your question, relying on all of these foreign countries isn't going to fit the bill over the long period of time. There is rare earths in Africa and places like Congo and things like that. But again, you run into the situation where, if you've been following kind of the uprising with the new administration that's come into office earlier this year, there's a huge onshoring aspect to what's happening in our economy. I think what's happened is in the 90s, there was the huge push with Clinton for globalization, which is fine because it brought the cost of everything down significantly. But it wasn't, I would say, until COVID, where COVID happened and everything got shut down. And then we looked around this beautiful country and we're like, holy cow, we actually don't make anything in this country anymore. So that's not sustainable. And so what we're seeing is the reshoring of these things. We want it to happen overnight. It's never going to happen overnight, unfortunately. But I think directionally, in the energy business, for example, Chris Wright on the energy aspect, he's been deregulating a lot of stuff. From the mining portfolio, President Trump is elected as secretary from Newmont Mining, which it probably flew under the radar, but they just greenlit 10 mining companies in commodities like copper, critical minerals, all sorts of things like that. And these projects have been stuck for Ryan, 10 years, sometimes even longer. And with the stroke of a pen, they're now going into production. So there's going to be a real structural shift here. And it's a very exciting time to be an investor, by the way.
But Justus, let me ask you, how do I, as an investor, figure out the timeline for this? Because it seems to me China, and you can use Tesla as an example, China can sit back and go, well, good luck getting your minds up to speed because the next year, the next 2 years, the next 3 years, let's see if you're still breathing. I mean, can they wait us out? Who holds the, quote, Trump card in this kind of situation?
Well, that's the real dichotomy, right? And so as soon as we put the 145% tariffs and we've kind of in a way crippled their manufacturing economy, their factories aren't operating at the same levels. They've got, by all the accounts, and even what Ryan alluded to earlier, where they've got goods that want to leave the country, but, we're the ultimate buyer. And I think it's telling that one of the first chips that they used was, hey, you guys are so dependent on our rare earths, we're going to ban these export controls. They could have done 100 different things, but out of everything they did, they picked that. It shows you how screwed we are in a certain way. It's obviously a game of chicken. Both places are going to be hurt, and I think ultimately it's just who's going to blink first. I do think it was very good. Secretary Bessent, who's a very brilliant guy, by the way. He's one of the great financial minds out there. I think he's really good at taking the tension down, tapering it down. I think we're seeing that with his kind of olive branches and things like that. But to answer your question, Adam, I mean, it's we're running a game of chicken. We're running into each other. I think cooler heads are going to prevail. I think that the president will extend the olive branches, and it's just in everyone's best interest to cut a deal. And it's a very long way of answering that. I don't think there is a viable other source because it takes so long to get these things under control, and you can't just do it by snapping a finger. But what I will say is, over the medium and long term, you can inherently see the setup of investing in these asset classes because America desperately needs them.
Ryan?
Yeah, no, I was going to make a bad Canadian joke. We're going to take over Canada anyway, so we'll get all those minerals. Bad joke.
Yeah, my relatives in Toronto won't be happy with it.
Yeah. But another question, I mean, robotics, I think, are so fascinating. I can't not watch every Tesla humanoid video that they put out on Twitter. But I'm curious, I mean, what is the time horizon where we're going to actually see robots in factories like the ones that we see, like Boston Dynamics, I guess, another one, but it's just such a fascinating field. It seems like it's moving very quickly. When does that come on market, in your opinion?
Yeah, so Boston Dynamics is a very interesting company. Obviously, you've probably seen it over the years on 60 Minutes and among other things that they've done a fantastic job. They were actually acquired last year by Hyundai, a car company. So I think there are already plans to start using the critical infrastructure. There's a very popular or famous AI company called Figure AI. It's worth about $40 billion in the private markets. They just cut a groundbreaking deal in the last month or so with BMW. So they want to start using their robots in the BMW manufacturing facilities. Um, I would also dig a little bit deeper, and these are really sophisticated robots that I'm talking about, the Boston Dynamics and Figures. But if you go into some of these, the car manufacturing plants, there is that advanced robotics of sorts, right? Advanced manufacturing, they have the usable arms and things like that. So stage one's already kind of happening. Stage two is starting to happen. As far as it goes with Elon, who's a very famous guy, very smart guy, by the way. He just gave his guidance on his call yesterday, and so that question was posed to him. So, what you keep talking about robots? When are we going to see these robots? And so his guidance is he wants to have 1 million in circulation by 2029. So that's the Elon. Yeah.
Can you just share with me, because I want to talk to you about gold, because you've got a price target for gold around $4,000 by end of year. Before we go there, Justus, can you share some tickers that I'm not asking you to say buy or hold, but as an investor, you might want to go look at these companies because they don't get the attention on the broadcast networks. Everyone talks about Tesla. Everyone talks about NVIDIA. But you have your finger on the pulse of what investors should pay attention to.
Yeah, and so I actually know the commodity space really, really well. I was a portfolio manager at Macquarie and some big firms, and we were generally in the commodity industry for over 10 years, financing and funding a lot of different things. So I understand commodities for better or worse really well. Being Canadian, by the way, as well. But so I think a couple things. I think that if you go back like from olden days, the gold typically has been the store of value. It's been around since Jesus Christ days. If you have an ounce of gold, you can trade it for a good or service in Moscow or Brooklyn, New York City. I didn't catch where Ryan is, but wherever Ryan is, you can trade it for anything there too. Back in the call it the 2020 market crash of COVID and subsequently the money supply growing by 40%, everybody was so bullish gold because inherently with the money supply being printed, you would think that gold would rise in value as it's always done since the beginning of time. It didn't actually happen. It's been a kind of a lost decade. The reason being is a lot of that luster and shine ended up in something called Bitcoin. So all those cash flows actually went to Bitcoin. And that was very good for Bitcoin. It got Bitcoin growing and it's here to stay now. It's been institutionalized to a large degree. But back to gold, that's actually the one thing that's lasted the test of time. In times of instability like this, it's generally a really good performer. I think it's actually, pull the stat up, it's either over the last 10 or 20 years. I think the last 10 years, it's actually outperforming the S&P now because of the great moves it's been making.
Yeah, it is.
Yeah, and so I think year to date, I know it's been off for the last 2 days or so, but it's up 35, 37%. So what I will say about gold is I don't think it's going anywhere. I think it's regaining its kind of, currency hedge type of status. I think it's going to be side by side with Bitcoin. I think what you'll see is the central banks of India and China and people that have been a little bit turned off about American policy in a certain way are starting to accumulate it aggressively. I think you've got all the speculators now who've started to jump in, which start to drive a market. I think it's worth $4,000 in the next 12 months. That's my personal call for whatever it's worth. I think it's run too hard too quick, so I would wait for a pullback of sorts. And the pullback, in my opinion, will happen in some semblance of this. I think generally, if the administration is able to cut one or multiple trade deals, that's going to be good for U.S. equities. And I think the luster of gold will come off in the interim. And I think in and around opportunities like that, it's probably a good time to jump in. But I think structurally now, the cat's kind of out of the bag. Mm-hmm. And I think directionally, I think gold's not a bad place to put 5% of your money or something like that. The very last point I'll make is Agnico Eagle is probably, in my opinion, the best way to play it. It's a fantastic company that they produce gold at $1,200 an ounce. I assume you don't have your calculators in front of you, but let's just say it's $3,000 an ounce now. Those are tremendous margins for a gold company. They produced 850,000 ounces last quarter. It's a juggernaut. They're in great jurisdictions. They're not in Africa or tier 3 jurisdictions. They're in Canada. They're in Mexico. They're in Australia, Finland. And so I would take a hard look at a company like Agnico Eagle.
Okay, so I want to ask a question to both of you. I'm going to start with Ryan first on this. Justus, you brought up Bitcoin. Gary Gensler has recently warned crypto investors that thousands upon thousands of tokens out there are worthless. Not Bitcoin, though. And I had on Matt Hogan from Bitwise last week, talking 2 weeks ago. With he's been talking about this since last fall. Bitcoin's going to hit 200,000. It's on this promise of being a store of wealth. I loved Justus just kind of raised his eyebrows on that one. But Ryan, what do you think? Is someone smoking crack here to think that Bitcoin's going to hit 200K?
I mean, anything in the short term, I think is possible because I think there's a lot of liquidity out there, right? Right now, we have this self-induced slowdown because of tariffs. And I think for me, Bitcoin is really just a measure of liquidity. And right now, I think there's still a lot of money out there because I guess my view is it's kind of like it's a casino chip disguised as a financial asset. You know, we're not using it to trade, you know, for you can't use it you're not using it for commerce for the most part, right? Very small, maybe for the black market. It's a great place for commerce. But other than that, it just seems to me like it's a tool for speculation. As long as liquidity is available, and it is, I think it'll do well. But I think once you get a liquidity crunch, which we really haven't seen, I think it's toast. That's my personal view on it. I just think it's it's complete BS, I guess, is the bottom line. Is my economic.
Well, Jamie Dimon called it something that starts with an S and ends with hit. I think he called it shitcoin. Was it Jamie Dimon? Who was it who called it that? It was either Jamie Dimon or it wasn't. I know that Warren Buffett has been opposed to it. But Justus, you kind of, when I talked about what Matt Hogan was saying, you kind of, I got a facial expression that said to me, you don't agree. How would you describe it?
No, not necessarily. I'm a very, not necessarily. So a couple things. Jamie Dimon is anti-crypto because crypto is anti-establishment, and Jamie Dimon runs the biggest bank in the world. And so, you know, they're essentially at odds. Warren Buffett's take is that it provides no utilitarian value, right? Warren Buffett likes dividends and things like that. Bitcoin provides zero of that. I was early in Bitcoin. Like we were in Bitcoin in 2016, 2017. It was less than $1,000. We were funding a company that was mining Bitcoin at a very, very cheap rate at that time. And then the price proceeded to go from $900 to $20,000 during that run. I thought I was the smartest guy in the world. I clearly wasn't, because the price came crashing back down to $3,000, and the cost of production for our Bitcoins were $6,000 because we ramped it up very aggressively. So I've got PTSD of sorts in the arena. And again, that was 16, 17, full disclosure. I do not own any Bitcoin, but I do have a view on Bitcoin. I think if they don't crack this Satoshi's code, because again, it's just an algorithm of sorts, right? Mm-hmm. And there is going to be advents of things like fission and technologies in the future, AI that might be able to crack this. Because if they're able to crack the code, it's effectively worthless. Unlike gold, where you've actually, there's only a scarce amount of it on the, in the world, you got to get it and things like that. And so, because it's all based upon a calculation that Satoshi has figured out, and nobody else has been able to crack.
Justice, it's fake scarcity. It's digits on a screen, right? There's really just a finite amount of gold. This is like a pretend made up scarcity. Like, that's the part I don't get.
We're saying the same thing. Yeah, we're saying the same thing, 100%. Yeah.
I just, the two of you've got to watch. It's on Apple TV. It's called Prime Target, and it's about cracking prime numbers and getting a prime finder. No,
I just want to add one thing. So I do also at the same time believe if nobody cracks it, it's become so institutionalized now. David Sachs, who I know, who lives close to me here in Florida, part of the year, and you've got probably the most tech-heavy administration we've ever seen in our lives. These tech guys absolutely love Bitcoin, so they're going to do everything they can to support Bitcoin. I could actually see it. I'm not giving a time frame. I'm just giving a caveat. If it doesn't get cracked, I could actually see it hit $1 million.
Whoa! That's getting posted on social. So let me wrap up with the two of you, and I'm going to start because I've got Angelo Zeno, who is very kind. He's waiting to talk. We're going to be previewing Alphabet earnings. I prefer to say Google. Why they changed the name is beyond me. But let me start with Justus, and then we'll go to Ryan. Justus, what's a closing thought you would want investors to think about where we are at this moment? Because I started the live stream by saying, okay, you can exhale, you can breathe again. But I'm still clutching the pearls. I'm still a little worried because China's not reacted to the overture from the United States.
I think there's too much at risk from both the countries. I think both countries don't want to feel the pain that you're thinking. I get that they're a totalitarian and dictatorship, but they really care about their people and the jobs. And so, as do we. I think a deal will be cut. I think all deals will be cut. I'm not going to give a timeline on it, but I would be a buyer. I have been a buyer of the market. I've been a buyer of Tesla during this pullback. I've been a huge buyer of the best American names in the S&P 500. These things last the test of time. I think these are great buying opportunities. I think the president is going to somewhat pivot where he's gone after the hardest things that he's thought in his head, being Doge, cutting things, very, very unpopular things, tariffs. I think he's going to start to wrap and announce all sorts of winners, i.e. being the biggest tax cuts we've ever seen, deregulation. He's going to start announcing these trade deals. I think the balance of his presidency is going to result in a very strong U.S. equity market.
Ryan?
No, I'll play off that a little bit. The world doesn't end very often. Last time I looked. And I think, fundamentally, once you get past tariffs, you've got a relatively strong economy, right? I mean, people have jobs, wages are going up, over inflation, and that's the real driver of the U.S. economy is people have money to spend. I know a lot of the sentiment indicators say that people are feeling bad. Well, in America, we feel good, we spend money. When we feel bad, we spend money too, as long as we have a job and we're making money. So I think the bottom line is the economy is going to thrive this year. I agree with that 100%. I would actually say maybe the winners of the last decade aren't the winners of the next decade, and diversify your money outside the Magnificent Seven. It's probably in the ninth inning. Whereas, globally right now, I think is extremely attractive. Valuations are much lower. They're actually stimulating their economies now, like we have for a very long time. They're cutting interest rates. So you don't need a lot to move the needle to move those stocks. You have higher yields, lower valuations. A lot of my clients are baby boomers and need income. So it's a great time to diversify globally, but 100% be bullish.
Ryan Payne from Payne Capital Management, Justus Parmar from Fortuna Investments. We appreciate both of you for being here on Talkenomics Live. Look forward to having you back on, and we'll pull some of these quotes. They'll be on social, but next time you're on, going to hold you to the fire, and especially Bitcoin 1 million. I hope you're right, because my brother has some Bitcoin, and I'm his favorite brother. So
I didn't say overnight. I said overtime if it's not correct.
Yes. Well,
I'm cracking that code in my basement right now, Justus.
Listen, both of you have a great evening. When we come back, we're going to be previewing Alphabet earnings. Angelo Zeno is on deck. He's joining us from CFRA, and we're going to be talking Google right after the break. Welcome back to Talkenomics Live. Joining us right now is Angelo Zeno. He is senior analyst at CFRA, and he covers what most of us call Google, but they changed the name, so they call them Alphabet, but I don't know anyone who calls them Alphabet. But Angelo, it's good to have you here and to see you again. And when we get Google earnings, Alphabet earnings tomorrow after the bell, what are the key metrics that you think investors should be paying attention to?
Yeah, so thanks for having me, Adam. And listen, I'd prefer to say Google also, but I've kind of been programmed to say Alphabet these days. But when we kind of, I think actually Alphabet's a good, first company to kind of go on deck ahead of some of the other big bellwethers next week. And the reason I say that is because they really have two key segments that you can kind of look at relative to the others, and that is their cloud business, and then you have the digital ad business, right? So on the
Hmm.
cloud side of things, it's going to have a lot of at stake for a company like an Amazon. And then when you look at the digital ad side of things, it's obviously going to have huge repercussions out there for Meta and how that stock performs. But when we think about what the key metrics we're looking out for on the cloud side of things, I think first and foremost we're looking at high 20s growth for Q1. Specifically, we're looking at about 28% growth. We think that's a number that's more than attainable. We think that the number for the rest of the year should continue to stay in the 25 to 30% range in terms of cloud growth. Clearly, they're going to have Blackwell ramping up here in the first half of the year, and that's going to help them in terms of sustaining those growth rates. I think also when you look at the digital ads side of things,
Hmm.
that's probably the more unknown right now for investors because of the uncertainty related to some of the tariffs, the macro uncertainty. What is enterprise spend going to look like here over the next couple of quarters? Clearly we've seen some uncertainty related to some of the China retail spend here in the U.S., the likes of Shein and Temu. So we kind of ratcheted our numbers down slightly on the digital ad side of things, more in Q2 to Q4. But that said, we're looking for high single-digit growth on digital ad for both kind of search as well as YouTube here in Q1.
Okay, so let's bring all of this in, because anytime I go to Google and I do what I used to call a search, I'm thinking, well, I can do this on Perplexity. And I know that Google has its tentacles, and I'm going to use the word tentacles, in different AI ventures. But Gemini, where does Gemini feature into this? And you're expecting a huge CapEx number as they build out AI. Is that correct?
Yeah, no, absolutely. So when you think about Gemini, I guess 2.0, right, which was launched in December, that's essentially their next generation of models that's kind of flowing into the ecosystem. And what we call 2025 and 2026 is we think that those are going to be the years of agentic AI. And when you think about Gemini 2.0, it's essentially going to drive greater reasoning capabilities for these next gen models. So our view is you're going to get it requires a lot more compute, as Jensen Huang has stated repeatedly, and that's going to help kind of we think drive demand on the cloud side of things. And when you think also about AI and their ecosystem out there, there's going to be a lot of attention in something called AI overviews as we kind of go into the print here in Q1, how they're monetizing it. Are they successfully monetizing it? We're going to want to hear as much as we can about AI overviews and what that's doing to the search business out there, because the whole point of it is, hey, listen, it could drive upside in terms of the pricing side of things, but it remains to be seen how much momentum and success we're seeing from AI overviews.
So you spend your day to day studying this. I'm a novice, so let me ask you, how do you monetize Gemini if you're Google? Because, for instance, my company where I work 40 hours a week, we have a Chat GPT Pro account, and I'm quite impressed. I mean, do they go head to head against Chat GPT, that kind of model? Is there another way to monetize this?
I think there are a ton of different ways you can monetize Gemini. But yeah, I mean, the question is right now, post DeepSeek situation, how much are people willing to pay for these models? Are you actually monetizing these type of models? What type of, what are we going to see here over the next couple of quarters? And I think that's something that they're going to need to explain, and we're going to need to see. And I think this is a big question for Alphabet as well as all these other mega hyperscalers out there, given the massive amount that they're spending. You're looking at 75 billion here for Alphabet this year. We want to see signs of kind of AI revenue, but kind of profitably growing AI, right, in many respects. And it's probably going to take years before we actually kind of see an actual kind of AI profitability really take off. But we need to kind of start seeing some return on those investments. And we need to start, or at the very least, we need to see these companies become a lot more efficient with their capital usage. And if we start seeing that stuff, clearly we think the street will reward Alphabet and others.
So let me ask you from, again, the novice investor standpoint, if I'm listening to that earnings call from Alphabet, and you've just said they're going to have to start answering what is the plan, the strategy to monetize this, and at what point. What I heard you say, if I'm understanding correctly, is that it's going to be not next year or the year after. It really is a long play. So are most investors willing to hold on to the Alphabet shares for this to actually become profitable for them when there's so many competitors out there that may get there first?
Well, I'd say the good thing here is the price they're paying for Alphabet is not very extreme, right? I think we're talking about 15 times next year's earnings from our perspective, and you're looking actually closer to about 14 times on a net cash basis. So you're not paying very much for this company, as well as a number of the other hyperscalers out there, given the recent pullback, especially that we've seen in the shares. So a lot of the hype that we've seen on the AI side of things here over the last 2 years, and we think somewhat warranted. It's clearly kind of pulled in significantly. So from a pricing perspective, if you're an investor, I think you get into these names, especially on the scaled back side of things. And listen, there's a lot more to the Alphabet story relative to just AI, right? I mean, this is a company where we think they're probably going to announce a new buyback. They're going to probably announce at least a $70 billion buyback plan out there. These hyperscalers or these mega cap companies out there, what's made them great stories here, not only over the last 3 years, but over the last 2 decades, has been their free cash flow generation and their ability to continue to return that cash back to shareholders. So I think that's something that you're going to see here on the call. They're going to defend their stock when they report tomorrow night. And they're clearly, when you look at this company also on a sum of the parts analysis, right? You start thinking about things like Waymo, which is going to ramp here over the next 2 years into a ton of new markets. When you start thinking about the upside to YouTube, and you also look at just Netflix just reporting and the stickiness that YouTube is going to have on their subscription offerings. Alphabet's got 7 platforms outside of search that have over 2 billion users attached to it. So this is a massive ecosystem that's not just tethered to search. And when you look at the valuation of this stock, I mean, we think we think you're getting a lot more than just AI for Alphabet.
Real quick, the metric that I think greedy investors like myself, 70 billion is the number you're looking for in the buyback for 2025, correct?
Yes.
And then let me ask you, you talk about the other platforms. I'm going to go to YouTube. I can't imagine an hour that doesn't go by in which millions of us are not somehow connected to YouTube, whether it's making our living by doing something with YouTube or utilizing what's on YouTube. Of their different platforms, is that the key one to pay attention to for growth?
I mean, that's a good one. I mean, outside of the cloud business, I mean, I would say you want to keep your eye on YouTube. Both on their ad side of things as well as on the subscription side of things, right? So we want to see what they're saying on both sides, but and clearly the bigger risk is on the ad-based side of things. But I mean, absolutely, that has been kind of it's a business that's seen some significant growth deceleration here over the last 4 quarters. They're facing some more difficult comps out there, but nonetheless, it's a business that's going to continue to grow. We think at the very least at a high single-digit to low double-digit pace here over the next couple of years.
Do you have any closing thoughts before I wrap up?
No.
Well, that's the most direct answer that I've heard in a long time, and I appreciate it. Angelo Zeno, I'm going to be speaking with you just to let viewers know. We're going to be talking about different things in a couple of days that we'll be posting on the Talkenomics page, and also at the other place where I work. We're talking about Meta and Apple because a lot of the big tech names are going to be reporting. But it's always a pleasure to have a discussion with you and the team at CFRA. Thank you for joining us.
All right, thanks for having me.
All right, and thank you for joining us on Talkenomics Live today. Remember, we are live every Wednesday at 7 p.m. We post clips from the discussions on our YouTube channel as well as on X and LinkedIn and the various social media posts. And we welcome your questions and comments. So have a great week. We will see you next Wednesday.